Do not have permission to live stream. Okay, hold on just 1 second. I'm sorry, I don't usually have these problems going live on Facebook, but sometimes my account gets fussy and Christina's doesn't. All right, it's going. Just about live. All right, we are live on Facebook. Good morning.
Good morning.
Hi, everyone. We have Dan Hultquist with us this morning. So we're very, very excited about that. And so we'll have just a brief introduction here. So Dan, you have a great book that we love to give out to all of our potential clients, all of our referral partners. In fact, I have about 30 of them sitting right next to me. So you have a great resource there, and why don't you take it away?
Sure. That means a lot. I know you and Christina and others within your group have been very supportive of some of the work that I've done in the past. I'll never forget Christina standing up in a NERML meeting and holding up the book and saying, if you're not using this for marketing purposes and training purposes, you're missing out. And that's always meant a lot to me. If you go back to the housing crisis, where a lot of things changed during that time, right? I went from a traditional mortgage lender to briefly in the counseling business, where I learned a lot about reverse mortgages, and then said, this is what I want to do for the rest of my career. It wasn't long after that I realized people just don't understand the product. And it just kept bothering me. When something needs to be done, I know many of you are the same way. So you see something that needs to be done and nobody's doing it, and I want to do it. Well, then I started writing Understanding Reverse. And so I was in originating and training at that time, but I really felt compelled to try to clarify what is a reverse mortgage, the nuts and bolts of how it works. And so I really appreciate the support everybody's given. Costs have gone up over the time, printing costs and delivery costs, but I will not raise the price. I am committed to that. The book price on Amazon and on my website is not going to change. What I might do in 2024 is ship most of the media mail. So it might take a little bit longer in the future, but I hope you guys are okay with that to save
We appreciate you keeping the price low as everything else is going up.
Yeah, it's interesting. A couple lenders, some of the larger lenders reached out to me recently and said, what can we do about custom branding these? Interesting, right? And I was like, well, I would love to do that. It's just going to need to be a large print run. But when I started looking at the numbers for a large print run, I can actually get it down to $7 a book if you want a custom branded print run just for you. It's just going to have to be a large print run, right? So
wow, how many is that? That's a great deal.
it's 1,000, but it includes the design costs. And so I know some of the lenders are looking at that. If anyone wants to pull together to do that, but the only way I can get it down to $7 a book, to everyone else is to have a large print run. But I know some lenders are waiting until the 2024 edition comes out, and then they will go ahead and order a large print run in January. And that's perfectly all right. But right now it's $8, $9, $10, depending on your quantity ordered. And I would encourage you, if any of you are going to place an order, find others that are also placing that order and place them together. As long as it's shipping to one location, we can get the cost down to $8 on the Understanding Reverse books. I also wanted to mention regarding, Understanding Reverse 2023. I hope you guys are using this space on the back. I know many of you are. I put a little plastic sleeve on the copies that I give out on my behalf. The plastic sleeves are available on Amazon. I know some of you print up stickers, so you don't have to get custom print runs. I can barely see that, John, but yeah, it looks like John puts a sticker on the inside cover, right? Yeah, and a lot of people have done that over the years, right on the inside cover. Use this space right here. And so well done. Because I don't want to market me. This isn't, I don't care if anybody knows at this point that I wrote it. I want everyone to market themselves, which means put a sticker on the back, use a plastic sleeve, put your business card in, because then you know it's compliant. If your business card is compliant, the book is now compliant, right? And so definitely, I don't want the referrals coming into me. And people that give out a book without contact information, they call me and say, somebody gave me this book. Please don't be that person. I don't have time to field the calls, and I don't originate loans either. So the whole goal is to really help drive your business. And I hope you do that.
Awesome.
So what else about the book? I think 2024 will probably have one additional chapter. I don't think there's going to be a lot in content changes. I think right now we have maybe 15 minor changes because of the way interest rates are very volatile right now. I might actually expand the PLF tables in the back just a little bit more, just knowing that we have no idea what's going to happen in the future with interest rates. I don't have a crystal ball. I like to play the part of an economist every once in a while, but who knows what's going to happen with rates. And so I'll probably expand a little bit of that. Some of the regulatory references are going to change. I may add a little bit to the glossary. And there's one spelling error, and that drives me nuts. There's one spelling error in the 2023. Hey guys, by the way, anyone that suggests a change to the New Year's edition gets free copies the next year. So each year I probably have maybe 5 or 6 people that send in submitted changes and say, technically you could word it this way and it would be more compliant or more accurate or more compelling. And I will go ahead and change the text of the book and give you copies. I mark you down for that change. If I adopt it, you get books.
Oh, what a fun thing.
Yeah, well, it's been great to kind of crowdsource the content over the years. Dennis said, challenge accepted. You know what, Dennis, I don't doubt that you can come up with some nice revisions. And it really helps me out because people see it from a different perspective. Sometimes I'm a little too technical, or maybe you have expertise in an area. My very first edition, maybe my second edition, I mentioned that Medicare is not means tested. And that's not entirely true. Part B premium surcharges are means tested, which means you make too much money, you pay more. for Part B. And I was like, wow, okay, I've always thought of Medicare as not means tested, but Medicaid is. And so I refined, this was probably back in 2015, 2016. And so you guys really helped me out a lot in refining the content. Just one word of caution, I do see the content showing up a lot on social media. Just source it, and I'm okay with it. I get that question all the time. Hey, can I create a meme around your 4 points or your 7 steps or whatever it is? And I was like, yeah, I don't mind you doing that, as long as it has the source on the meme. Don't just put the source in the posting, because people will then share the image and not know where the content came from. And we do register this in DC in the Copyright Office each year. So generally not a problem, just be considerate of that.
All right, everyone. So remember, credit your posts.
Yeah, I just saw 2 more today, but that it happens. But people want good, relevant content to post because it's persuasive. Education is persuasive. I know you guys believe that. Is that
wholeheartedly.
The reverse mortgage sale is not about selling. It's about educating to the point where they can make a decision on their own. And that's how you sell to baby boomers and those who are older.
Absolutely. And they really do want to feel a sense of control as they're going through this, and not just, oh, this is it, everything's spinning out of control, I don't understand what's happening, and that's not going to have a good outcome. So,
I was gonna also mention the resource guides. People know my business because of understanding reverse, but believe it or not, I sell more copies of these, and it's
I believe that.
Yeah, it's because they're custom tailored. If you haven't seen these before, guys, it has the same spot on the back. This book has been given to you courtesy of you, right? And so these are marketing materials. This one's a homeowner's guide. These are not saddle stitch where you have staples on the back. I hate those things, right? They look cheap. This is actually printed what's called perfect bind. And perfect binding is when it's printed like a book. But this is the smallest number of pages that you can perfect bind. I wanted it simple, easy, no regulatory references that aren't needed. So it's phrased for the common person to be able to understand from a homeowner's perspective, what is a reverse mortgage? So this is really a simplified version of understanding reverse, but without all the regulatory stuff that goes with it. All 3 of these sell about equally well, which I was kind of surprised. I actually thought the financial planning would outsell them all. And it doesn't. They're all pretty equal. The financial planning guide does not go into a lot of the Wade Fowl, Jamie Hopkins, Barry Sachs, Dr. Salter, very detailed explanations and research. No, it's designed to start a conversation about some of the strategic uses. And so that's not me. I'm not at that in-depth on the financial planning initiatives. I get to talk to Barry every once in a while and Wade, but no, it's really about how the reverse mortgage interacts and starting a conversation with some of the basic talking points. So you can take a look on my website and get a better description. I would say probably this one has sold a little bit more this year than the other 2. This is the home buying guide, because we have a few people on the West Coast that said, I want everybody in LA area that's a realtor, real estate professional to have a copy. Well, that means you're going to have to order a lot of copies, right? And we do quantity discounts as well. And we do have a couple people looking at custom branding these as well, which is fine. I don't care. I don't need credit for this. I want you to get credit. And so if you're interested in large quantity orders with custom branding with your branding requirements, we can do that.
Awesome. So everyone out there might be asking, why are we looking at these books and this marketing stuff? And what I can tell you is it's all about education and public perception of the reverse mortgage. And I think in general, the public has some misconceptions about reverse mortgages or some myths or some things they heard 30 years ago. And so, Dan, do you feel that way? There's some public misconceptions.
Yeah, and you know what's crazy? It's not simply the United States. I did some consulting work in Canada, and I started to do some exploring and talking to some of, they call them regional channel managers. They're for some of the banks in Canada. In talking to them, I was like, hey, here's some of the challenges we face. And they're like, oh, it's the same here. It's like fascinating. The bank takes her home. The heirs get screwed, right? They're too expensive. You can outlive the product. No, those are all things that are not true. And so obviously education is a way to counter that. It's amazing to me that we've been fighting that battle for 30 years. People still think that we take the home. And so sometimes when I speak on that topic, that is the biggest misconception. Somehow the bank is wanting to take your home, or they get the home at closing or when you die. There are a couple reasons why that myth exists. Number one is there were products in the 60s and 70s that worked that way. Yeah, some of you know. My grandfather had one. Actually wasn't a bad product. He did give up title and ownership. And he was able to utilize the product very well, but that's not the way the Heckham works. But that's first and foremost, there were products that existed, and there are products internationally that still do that. And actually there are products in the US, they call reverse, but they're really equity release strategies. And so we're seeing a lot of those emerge. But the second reason is, you go back to 2009, 10, 11, 12, people were upside down. Mom and dad pass away. The heirs wash their hands of it and say it's a non-recourse loan. It's not my fault. It's not my problem anymore. And they just let it foreclose. And we saw a lot of that, obviously, in the aftermath of the Great Recession. And so being able to explain that is important, why the misperception exists. Now, you just wind me up with a question, Elaine, and I'll run with
it. Oh, well, Christina had mentioned something about a recent talk you gave with Shana.
Yeah, Shauna Roach.
Yeah, and wondered if you'd share some of that information with us.
Yeah, you know what? Let me pull that up a moment. Okay. Discuss amongst yourselves, and I will actually bring up that presentation.
But those marketing books, those anything that's going to help education is a great thing. And I've taken to leaving copies of the books where I know seniors gather, just so they can thumb through it and look at it. I hate the idea that there's a percentage of seniors out there that just have the wrong information and are making their life decisions based on stuff that is just not even accurate anymore, and that they could be so much more comfortable or happy or secure if they just took the time to get some of the right information. And so sometimes I just leave that there in places where they'll find it, because I'm hoping that everyone will eventually get the message that this is a good product if it's used correctly, and if you have ethical loan officers administering the product, selling the product, then it's a great product and be a great fit.
Would you like for me to go ahead and share my screen and present this content to you?
Sure.
Okay, I can do that. Let me just pull up this screen. Yeah, so this was really on behalf of Movement Mortgage.
Let me make you host so you can, there you go, now you can share your screen.
Perfect. So this was really on behalf of Movement Mortgage, which of course is a lot of the work that I do is building out this program here. But I'm free to share it because I've shared it in DC in front of some of the MBA committee members and some NRMLA members. And so this is public information. Sadly, the HUD Deputy Assistant Secretary was not in the room because I have a lot of very direct things to say about how the product is right now. And maybe that's a good thing, right? Because I think the public perception issues are our issues to handle. It's the people on the streets talking to people one-on-one across a kitchen table, that's our burden to bear, because we know that our trade associations have really done nothing to help this situation. These issues have persisted for over 30 years, and really it's up to us, right? So public perception is an issue, and I was asked to speak in DC on this topic. And my first comment was, it's nothing new. This has been going on for years. In fact, this is a quote. It's not a recent quote. I'll give you a hint there. More than 20 million senior households qualify based on age, property, equity. Again, these are not current figures. This has been said in the past. With 50,000 reverse mortgage, that's only 0.25 market penetration. So we're going to start this initiative. We intend this to be the loudest message ever delivered by the reverse mortgage industry. It behooves us all to educate the public about how recent changes have been made this safer, blah, blah, blah. That was in 2013. Some of you may remember the Reverse Mortgage Extreme Summit, and we participated and we shelled out a lot of money, and ultimately no leads, no traction, because you can't do this on a global scale. It's a one-on-one talking with your family members. I had a family member tell me, hey, I would never get a reverse mortgage. I said, why would you say that? Because I'm going to do it. I feel like I understand the product really well. So why would you say that? And she said, well, because I don't want to give up title and ownership of my home. Excuse me? Then you're admitting you didn't read my book. Busted, right? So even family members of mine, oops, I'll admit someone into the room for you.
Thank you.
So even family members have the poor public perception of what we do. And, those are the people we need to start with. And I'm like, clearly my message didn't get through, but she didn't read the book. So it starts with personal buy-in. And I challenged a few people on the previous call and in DC. I said, I gave a presentation to the MBA. Now, I wasn't planning on speaking at the MBA's national conference last year. I wasn't planning on it until a bunch of people dropped out, right? And so the industry was in flux, and some of the speakers dropped out, and they said, hey, can you talk about opportunities within reverse? I said, I would love nothing more than to drive over to Nashville and talk about the merits of the reverse mortgage, but I'm going to speak boldly about it. Fine, do it. We need somebody to come in, and we had standing room only. I hope some of you were there, but I opened my remarks by saying, who here is excited about getting a reverse mortgage at age 62 or when you retire? And I waited, like, one hand went up, and you know her, she's Jessica, she's an account executive at Finance of America Reverse. And I said, Jessica, turn around and wave to the rest of the crowd. Guys, she's a wholesale account executive in this space. She's holding her hand up. I'm holding my hand up. I feel like I can definitively say I understand the product, and I'm getting one, and nobody else in the room is looking at getting one for themselves. I'm personally bought in. And so when I talked to some of the other groups about this presentation, I said, if you aren't personally bought in, you will not sell this product. At least you won't effectively. Now, I had a plan to buy a home at age 62. That plan got disrupted because I'm going to need to move to help take care of my parents. So my goal was to get one at age 62 through a HECM for purchase. I'm now buying a home, and I'm buying a bigger home, building a bigger home right now, because I know that it's part of my retirement strategy. And if you don't understand the strategic uses in retirement, from increasing cash flow, is increasing liquidity, decreasing your tax liability, and increasing your net worth with this product, then we probably don't need to be selling it, right? And that was a strong message, but that message has been accepted, challenge accepted, right, guys? And so, my boss got one the day after he turned 62, and it made the news, because he's kind of a spokesperson, and he's written a book, and he's done a great job of that. I've got 8 years to go. Okay, I'm 54 right now. Am I 50? Yeah, I'm 54 right now. And so I still have 8 years. Actually, I will apply in 7.5, because I want to make sure that, I get the protection of the floating interest rate, the floating expected rate down if I need to. But what's scary is there is a very prominent figure within our industry who had an assistant that retired. And my boss actually confronted her and said, "Oh, well, what are you going to do with your reverse mortgage?" And she said, "Excuse me? Why would I ever do that?" Well, this is the assistant to one of the most prominent names in the industry. He said, "What do you mean? Why would I question that? Don't you want increased cash flow, reduced taxes, and increased net worth? Those are things we all want. Why would you question not getting one?" And the executive stepped up and said, hey, I paid my people well while they work for me. She doesn't need a reverse mortgage. Who said anything about need? I thought we crossed that bridge 10 years ago. We don't sell exclusively to needs-based borrowers. We sell to lifestyle borrowers, and we sell to financial planning borrowers. It's not about need anymore. And we crossed that bridge long before Wade Fowle was writing his books, and Dr. Salter with his research, and Barry Sachs. Is we were moving in that direction. They just accelerated the process, right? When the academics came on board and said, "Hey, you ought to get this at 62, not because you need it, because it's prudent." Hey, we had a hand raised. Do we want to answer a question about that?
Yeah, I was at a jewelry party last night, and the lady that owned the home was introducing me, and she does reverse mortgages, and her neighbor was there, and her neighbor goes, "Yeah, well, I'm glad I don't need one of those." And then the host of the party was like, "Yeah, I don't either." And I wasn't sure, what do you say to that? Because like you just said, they don't need it, but it's a lifestyle or financial planning. And maybe that's what I need to remember the next time somebody says I don't need it.
Well, my response, and some of the others on the call probably have that canned response because we've heard that a lot. And I say, I don't need to save $5,000 on my taxes this year, but I have the best CPA that allows me that.
Yeah.
There's a lot of things that you don't need in retirement, but you want them. I want a mortgage that builds a massive line of credit secured by the federal government that's not frozen, reduced, or eliminated if property values drop. Why wouldn't you want that? Oh,
Right.
well, I have enough money for retirement. Are you sure? I can also give examples of a very close friend of mine who was a CPA. He worked for Arthur Andersen. He had the General Motors account, maybe one of the most powerful CPAs in the country. Does anybody remember what happened when Enron went under? Remember what happened to Arthur Andersen employees? He had just retired. He was loaded for retirement because he had a massive pension he had amassed over a number of years. He lost it in one day.
I lost 75% of my retirement funds
Oh, John.
to Enron because it looked so great.
I am sorry to hear that. And you know what? Your story's not alone. You're not alone in that. But I mean, it was devastating to him. It was hard psychologically to wrap your mind around that, isn't it, John? I mean, it was very difficult for him. And now he was a good friend of mine. He recently passed away, but his retirement was forever changed. Now, if he had gotten a reverse mortgage back then, that was a long time ago, right? So what was that, 2000, 2001 maybe? His line of credit would be worth more than his house by a long shot. He wouldn't have to worry. So again, that would be my response is there's a lot of things we don't need in retirement, but you should want them. I want a federally insured product that allows me to have a line of credit that grows consistently, grows at the same rate as interest rates plus 0.5%, that offers me future security. Why wouldn't you want that? Now, I would also throw out those 3 or 4 things that we should be able to, we can't guarantee, but we should be able to offer with this product to someone who says they don't need it. Well, you can increase your cash flow, you can increase your liquidity, you can decrease your tax liability and increase your net worth. You're thinking, how can you do that? Well, because you're drawing from a non-taxable source of retirement cash flow instead of, what Harlan calls bucket number 2, which is your IRAs, 401k, and other retirement savings, which is taxable. So compare the two. Sometimes, just to push this point a little bit further, some of you know I play competitive pickleball. And when I play like national and regional tournaments, on the back of my shirt, it says, ask me about home equity and retirement. And people say, okay, what's your story? And I say, well, let's say you have 500,000 in retirement savings, which is the minimum for Fisher investments, right? 500,000 here, but I also have 500,000 in liquid home equity. How much have you really saved for retirement? And they think about it. They're like, 500. No, you just don't understand that this is liquid. We can make that liquid. 500,000, you're a millionaire and you don't even know it, and you're not living like it. You're not living your best life because you don't know what you've got. I know, just wind me up, Elaine, and I'll tell you. So, but rest of the presentation, what percentage of traditional LOs will consider a reverse mortgage for themselves? We're talking traditional forward originators. And I asked that in DC. I asked it in a couple other presentations. The general consensus is maybe 1% to 2%. And my survey, when I asked them to raise their hands, either they're too embarrassed to admit it, or they have no idea what this product is. It's probably a combination of both, right? But probably 1% to 2% at most. Well, that's really no different than the general population. But they're mortgage professionals. They should know better. Now, what really hits home, what percentage of reverse LOs have a plan for themselves? Well, this group that I'm speaking to is probably a little more skewed higher, right? But I would venture to say that less than 5% of those that call themselves reverse mortgage professionals have actually thought about their own plan for retirement. And that's sad. We need to be the best example. I know a lot of reverse mortgage professionals that have one already because they've crossed that 62 threshold. Now, next year, I'll have to decide whether I want to go proprietary. I may have the opportunity, who knows? So with the presentation, I talked about the 5 most troubling public perception issues. And it's really the reverse mortgage stigma. HECMs are complex. It's a form of debt. And of course, Dave Ramsey says all debt is bad. HECMs take title to your home, and HECMs are expensive. And I don't need to go into each one of these in detail, but ultimately, I went through and described each one of these public perception issues and then described how to handle it from a trade association standpoint or from a one-on-one individual standpoint. Either way would be fine with me, but that's got to end. I think you all would agree.
All
So
right.
that's just the shortened version of what was supposed to be a 1-hour presentation in DC, even though they cut my time.
Well, thank you for sharing that. And I think that just really brings home the fact that, you know, you need the education. Everyone needs this education. If you're a loan officer and you want to be doing reverse mortgages, having the educational background, understanding the product, and in some ways it is a little bit more complex of a product, takes a few minutes to understand, and that's just because it's different. Okay, it's not intrinsically hard, it's just different than what people are used to, and it takes a minute to get educated about that. And when you can become the respected person of influence for these borrowers, and you know what you're talking about and you understand the product well, you can really address all of their concerns, you know, one at a time, explain why that perception came into play, which I've found makes a big difference, is letting people know where that started. You know, it wasn't just that their neighbor had a bad experience. It was this is a story that has been passed down now through a couple decades, and explaining where it came from, what fixes were done, how it works now, is just an incredible gift you can give all of these seniors, because everybody needs a reverse mortgage. I mean, there isn't anyone out there who is so secure that they can't be more secure. And
Right.
we don't know what life is going to bring tomorrow. We don't know what strange thing is going to happen, what corruption is going to be uncovered. or you know, how that's going to be. Let's see, we got a question. Can you address the foreclosure issues in the public perception?
I can, yes, and thank you for bringing that up, Dennis. You know, this really came to a head when the USA Today article came out. What was that, 2016, 17? And oops, some of you might have your speaker on. I hear some feedback. But when the USA Today article came out, it was very damaging to our industry, and it talked about the 100 foreclosures that occurred in our. They basically said 100,000 HECM loans that were designed to protect seniors failed. Well, what did they mean by failed? Well, they foreclosed. Well, there's two types of foreclosures, and I explained to the journalist before they published the article, they reached out to several people in the industry, including our trade associations. And one of them called me, one of the journalists, and said, you know, here's kind of the basis of the article. And I said, 100,000 loans failed. Well, describe to me what that looks like. And they said, well, they ended in foreclosure. And I said, what makes you think that was a failure? And she was like, well, what do you mean? It foreclosed. I said, okay, let me give you an example of what I call a beneficial foreclosure. She's like, yeah, that's a new term. And I said, no, I made it up, right? But there's beneficial foreclosures. And I define a beneficial foreclosure when the borrower borrowed more money than the home could satisfy upon sale. Now, we can't ask the borrower, can we? Because they died. If we could dig them up and ask them, or if we could channel them at this point and say, hey, Mr. and Mrs. Smith, was the reverse mortgage a good deal for you? They would say, yes. I borrowed more money than the home could satisfy upon sale. Why was it upside down? Because we had a massive housing crisis. Would they go back and do it again? Yeah, they would. But ultimately, it ended in foreclosure, not because that was the intent of the lender, not because that was the intent of the borrowers. They died, and the heirs looked at it and said, there's no economic advantage for me to get involved at all. How about if I grab my stuff and I exit stage left? And that's ultimately what happened. There were a lot of those where a borrower died with the reverse mortgage. They were upside down because of market forces. Ultimately, the lender foreclosed because that's how they obtain the asset back to sell it at a loss. That's what happens. That's a beneficial foreclosure. She said, well, what about the other ones? I would call those neutral foreclosures, because there were really only two types of foreclosures that occurred in the aftermath of the Great Recession: beneficial and neutral. And she's like, okay, well, define for me what is a neutral. I said, it would have happened anyway, right? The reverse mortgage assisted the client, allowed them to stay in the home for a much longer period of time, but they couldn't pay their property taxes. We paid off their mortgage, eliminating their monthly principal and interest mortgage payment, but they couldn't pay their taxes. Now, that probably would have happened very, very quickly if we didn't give them a reverse mortgage. Now, it's a shame that it happened at all. And now we fixed that, right? So when the journalist was publishing this article, this came out long after financial assessment, right? That was 2015, April 2015. We had to do a more sophisticated underwrite for credit history, property and charge history, and residual income. So you're late to the game with this. A neutral foreclosure is someone who loses their home to foreclosure for no fault of the mortgage. It doesn't matter if you have a forward, a reverse, or no mortgage at all. If you don't pay your property taxes, the major lien holder will take your home from you, right? So that would be my explanation. There's really two types of foreclosures. Now, there are others, but in the aftermath of the Great Recession, when people were complaining about them, yeah, that's what it was. Does that help?
Hey, Dan, can I just kind of give some flavor to that question?
Mhm.
So I have a guy locally, he kind of positions himself as a consumer advocate. And you know, he was saying that, well, the foreclosure rate on reverse mortgages is like at 10%. Okay, that's fine. I mean, I explained to him that, you know, a lot of those are voluntary. A lot of them, like you would say, a beneficial foreclosure or whatever. And, you know, I searched high and low and I cannot find statistics on this stuff. It's just crazy.
Yeah, there is a report that came out. It was published in Reverse Mortgage Daily, and I can find it for you, that talked about the impact of financial assessment and how it's, it peaked at 10%. The foreclosure rate was about 10% in the aftermath of the Great Recession, but tax defaults went down to like 1 or 2. And so there is a little bit of data on there. I'm trying to remember who published that data. It might have come from RMI. I could check with I'll check for the article, Dennis, and there is some data out there, and it has really dramatically improved. Now, the dirty little secret is, did that really help the Mutual Mortgage Insurance Fund? No, it didn't really impact it. Now, of course, we don't want to foreclose and we don't want tax defaults, because those are all things that are generally bad for the borrower. But now, it didn't really help the Mutual Mortgage Insurance Fund, because if someone defaults on their taxes in the first year, FHA actually makes money on that. They're not going to sell the home at a loss, especially with PLFs the way they are today. But they contributed money into the fund. Yeah, I can get you the data on that, and we'll see. But the report basically said, see, financial assessment worked. And for the large part, it did.
All right.
Yeah,
Oh.
Dan, I've got a homeowner's book going out today. I was talking to, I belong to a large sphere of influence, which is a hunting forum here in Washington, of which I'm one of the top members. And one of the guys wrote to me and said, how can we purchase part of my parents' land? They need some cash flow. Just perfect. And as far as being a regular loan originator, to have that option for him. And we talked, and I said, have you thought about a reverse mortgage? Your parents won't have to cut up their land. You guys won't have to pitch in and buy it, because they live all over the country trying to figure out how to give their parents more cash. So this is going out in the mail today, and that's the homeowner's version. And I very much appreciate understanding reverse. It was required reading by Christina, and perfect. So anyway, just wanted to share that solution for these guys, and he's excited about it. So
That's awesome.
yeah.
Hey, there's we've also seen, do they own the home outright, by the way?
Yeah, they own the home and the land outright. I think it's like 10 acres land in a house.
Yeah, sometimes when there's 10 or more acres, sometimes we'll actually recommend parceling off a portion of it and doing the reverse on what's actually customary for the area. So the house in 3 acres or house in 4 acres. And that's actually a good time to do it, because then the excess acreage isn't encumbered by the reverse. It gives them the ability to sell that excess acreage to get even more money if they wanted. And so that's a nice little strategy that I know some loan originators like to use, especially if the guy's in Montana, and they're right on the edge of town where it's a house and 4 or 5 acres, and then he actually owns the rest of the 150 acres. You're only going to get credit for what's customary for the area. And so parceling off allows that to be unencumbered, which is nice.
That's interesting. So a double dip.
Yeah,
very interesting. Thank you.
Absolutely. Yeah, I did want to mention, Elaine, I was going to mention that I know some of you are waiting for a new type of book to come out. And I haven't come up with a title yet. So I was thinking about your reverse, because it's for people who already have one and their heirs, surviving spouses, their trusted loved ones, to make sense of what happened when mom and dad got a reverse mortgage. How do you read the servicing statements? Should we make a prepayment or take a draw? It's in editing right now. For those of you who don't know Jessica Guerin, she used to be the editor of Reverse Review magazine. Great editor. She's an outstanding writer, much better than I am. So I always send my stuff to her because she makes me look a lot better. And so she has, I think, 4 kids under age 7 right now. So she's, if everybody's napping at the same time, she'll help me out and she'll do some editing. But she has the book right now. All of the subject matter experts that were able to chime in have made the corrections that they want. But it covers things like, what are the creative uses for reverse mortgages? How do I make a draw request? What's the non-recourse protection? Borrower's obligations. What are the occupancy requirements? Oh, big one. Can the HECM borrower take extended travel? Yes, they can, even up to 18 months for a Mormon missionary that we got approved because they went through these 7 steps to ensure that the loan doesn't become due and payable. Common uses, can you draw and repay multiple times, which we've seen people use that for business purposes. IRS forms, 1098, 1099-C for cancellation of debt. A lot of it has to do with the spouses and the heirs. I broke it down into 10 chapters for spouses and heirs. I have chapters for the borrower and strategic uses. Common concerns. Does it impact my taxes, government benefits? Does it impact my home equity? What are payoff amounts? And one of the most important issues of the past year, what if my home burns down in a fire? For those of you who are in Colorado, the borrower didn't understand their rights and responsibilities, and the servicer butchered it too. Let's be honest. And that wasn't popular when I said it, but I will reinforce, the servicer didn't know what they were doing either. So there's enough blame to go around. If this book gets in the hands of everybody, including their attorneys, they will know there's no need to legislate. There's a need to educate. Okay, so the fact that they create a new law in Colorado was irresponsible. Just tell them what the responsibilities are. Okay, there are regs that actually determine that. And so the borrower needs to be educated and the servicers in some cases need to be educated. So guys, just be patient. I'm trying to get it out as fast as possible, but I get calls every week. Hey, when's it coming out? I have no idea because Jessica has 4 kids at the age of 7. So let's give her some space and let her do her magic. She will say in 2 sentences what I say in 4. And so she's extremely talented.
Awesome. Well, we're excited for that to come out.
Yeah, it's gonna be out soon. I can't give a date, but I'm trying as hard as I can and juggling a lot of things right now. The other thing I was going to mention is, do you want a quick demonstration of rapid reverse for those who don't use it currently?
Let's do it.
We have time? All right. Let me go ahead and I'm going to pull up my mirroring app. And
Okay, your host again.
okay, I'm going to expand this screen if I can. So for those of you who ever want to demonstrate any use on your phone, this mirroring app, it's called A Power Mirror, is actually a pretty cool piece of software. So basically all I need to do is click on wireless connection, and the free version gives you 10 minutes. All right, I'm cheap, so let's go ahead and take a look at this. All right, so this is my phone, which means I need to get my reading glasses on. I'm at that age. In the upper left-hand corner, you'll see the app Rapid Reverse. It is available for iOS devices and Android devices. And I really created this to, as the 10-second solution is what we call it. I have fat fingers and tremors, which makes it difficult sometimes to press that little X. But once I do, to get the little piece of trivia off the screen, in 10 seconds, I can actually run scenarios for borrowers. Typical scenario is $500,000 home value, $100,000. There's a 62-year-old borrower with a default lender margin of 2.5. You can slide it all the way down to the U zone where you have a non-borrowing spouse age 18. We don't talk about that very often. I just did a presentation to a realty group in Beverly Hills, and they said, you might want to use like something in like the 45 range. And I was like, seriously? And they said, yeah, it's pretty common here. And so having a younger spouse is quite common in some areas. We default to 62, and then you can slide it up to age 75. But you can see the numbers move dynamically. A 75 is typical, right? 73 to 75 is typical for our industry. 2.5 margin, yeah, it's kind of a neutral zone. I could drop down to 1.5. I can go up to 3.5, but we don't see a lot of people straying from this. I'm not telling you how to price your loans, but today a 75-year-old with a 2.5 margin would qualify for 41%. So the expected rates are actually pulled every, I usually update it every Friday afternoon to at the latest Sunday morning. But over the weekend, these will be updated for the rate change on Tuesday. And so this app actually pulls it so that the next time you open it up, it will have live rates. So as long as it's during the business week, right? So just know that I'm going to go ahead and update this. Usually it's Friday evening, but after hours. So I can tell someone who has a $500,000 home and $100,000 payoff, well, you're going to qualify for principal limit of 205 after we pay off your closing costs and your existing liens. You have $89,000 left in a growing line of credit. All right. So if I put that home value up to 2 million, it's going to cap at 1,089,300, which is the HECM limit for this year. Now, this alone is going to give you enough information to know if someone's in the ballpark. Okay, so Mrs. Smith tells me that she's got a $300,000 mortgage balance. Well, do you have $111,000? Probably not, right? Some of them do. Some of them have extra money. They just don't want to be making this mortgage payment again. And so you want to ask them, well, does it make sense? Sometimes it does. Many times it doesn't. Some of you are better than others at selling a short to close scenario. You're basically coming to closing with enough money to ensure you never have to make a payment again, right? Now, using this scenario, I can click report and I can get a lot more information if I want. I can go with a 10-year amortization, a chart, a pie chart, and everything that can be calculated, including the initial mortgage insurance premium, the origination fee, which defaults to the max. Down at the bottom, you'll see this little note right here. We only count the 2 largest fees because every one of you lives in a different state, in a different region, and some of you lender credit, some of you don't. But this is going to calculate initial mortgage insurance premiums and origination fees only. So just know that you might want to bump this up an 1/8 on the lender margin and lender credit, whatever you want to do, or explain to them that, hey, this doesn't account for third-party charges, and I didn't want this to be an LOS. And then I can simply click share, and I can send it to anybody that I want here. If it's Android to Android or iOS to iOS, it goes through seamlessly. So we see cases where it's not, right, from iOS to Android devices. And so in that case, I would just click email, and it emails the attachment. So, or you could take a screenshot, send it to them. Either way, it's perfectly all right. Let's say this is a purchase transaction. I can do that in 7 seconds. Even with fat fingers and tremors, I can actually put a purchase transaction in 7. You can do it faster than I can, I'm sure. I'm not like my daughter where I can type with my thumbs like a million words a minute. But now you're looking at the borrower coming to closing with $311,000 to buy a $500,000 home. And a lot of clients that sell their home and net $500,000, they're thinking, well, I want to buy a $500,000. Maybe they net $300,000. They can buy that $500,000 home and still get what they want, which is no monthly principal and interest mortgage payment. But you might find they can qualify for $700,000, $750,000 if they have $500,000. So again, it's a same reporting function. This will take you right to my blog, and this is the legalese associated with it. It's all been vetted, so we're okay from a legal standpoint.
What's the name of the program, and is there a cost to it?
Yes, good question. There is a cost. It's a subscription model right now. It's $4.99 per month. Or you can purchase a year's subscription for $49. We don't have a lot of people unsubscribe. I'm going to go ahead and take this off the screen, which is really reassuring to me. If people aren't unsubscribing, that means they're using it and they find value in it. And so I actually have to pay it too. So I made the thing. I'm a 50% owner, but all the subscriptions are run by Apple and Google. So iOS and Android devices. And so I don't really have a choice. I actually have to pay and then I expense it, right? But yeah, it's the lion's share of that goes to Google and Apple, which is probably a good idea to keep some stock, Apple stock and Google stock, because they make residuals on all these kinds of things. But yeah, the lion's share goes to them. But if you have any questions about it, I have a site. You can go to rapidreverse.com and it will take you to my other site where I have a page on there. But Rapid Reverse, and by the way, if you're an Android user, that's one word, Rapid Reverse. If you're an iOS user, you'll see it in the Apple Store under 2 words, but we're trying to get it acceptable, 1 word or 2 words.
So it's rapidreverse.com.
But what's the name of the app that you were just using?
Rapid Reverse, and it's got a little rabbit facing the left, and looks like he's going really fast, right? So if I ever do get a tattoo, it'll probably be the Rapid Reverse bunny. It's a nice little logo, and it cuts to the heart of what we're trying to do. Rapid Reverse was actually, my developer came up with that name, and I was like, oh, that's brilliant. Kind of sounds like rabbit though. And that's how the logo came about. But yeah, the idea is it shouldn't take you 7.5 minutes like it does with reverse vision to get these figures.
Yeah.
And if you've ever used reverse vision, it takes 7.5 minutes. Quantum, it's 2.5. But if you're out in the field and you don't have your laptop and you want to try to log in and quote some figures, this actually doesn't need internet access except to update the rates. So if you're out in central Pennsylvania, where my parents live, there's areas where you will not get cell reception. You don't need it. Rapid Reverse doesn't need it at all. It's self-contained.
That is very, very cool. I like that.
So you got some tools to help you. If you guys have any questions, just reach out. You guys have been friends of the industry for years, and thank you for all the things you do, making sure everybody's educated and up to speed. And I know you guys do a great job with coaching, which is sorely needed.
Yes, it really is. And I'm going to share my screen now with let's see here, too much is showing. There we go. This is sort of a save the date. We don't have it open to register now, but we're going to have a virtual event on September 25th. And I just want everyone to save the date for that. So we're going to be talking about understanding the current reverse mortgage market and retirement strategies. So hopefully we'll be getting into some marketing issues and overcoming some objections and why this is a good time to learn about reverse. All right, so thank you everyone for seeing that, and just to save the date, we'll be telling you more about it in the following weeks. And I really appreciate everyone who came on, and thank you, Dan, so much for your time and knowledge. And let's have a great weekend, and everyone have a great day.
Thank you.
All right, thank you all. Bye-bye.